So up next, we do have a panel discussion about a topic which is very personal to me, about financial inclusion. So I come from the US where you can walk out of a grocery store with a credit card. Everyone in the US has a credit card. They're all able to use it. They have a credit rating. Whereas in India, we still struggle with doing a risk assessment on someone who's not from a metropolitan city, someone who doesn't make at least, 30, 40K a month. So when it comes to the topic of financial inclusion, there's a ton of scope in India, and some of the numbers that my own organization, Zest Money, uses are 800 million bank accounts compared to 25 million credit cards. So what do we do about the remaining 775, out of which at least half may be financially credit worthy to some extent? So to add some thoughts to this topic, I'd like to welcome on stage Mr. Jeff LoCastro, founder and CEO of Neener Technologies, Ms. Paarul Dudeja, Director of Asia Investments at Accion Venture Lab, Mr. Sanjay Jain, partner at Bharat Innovation Fund, and Mr. Siddharth Damija, Head of Growth, Enterprise Business at PayPal. And I'd like to invite the moderator, Ms. Harshada Sawant, Editor of Startups at CNBC Awaaz. Please give them a warm welcome.
You guys are all using those mics, I guess. Can you hear us? I thought SDG would pull in a bit of a crowd, but hopefully they'll hear us speaking and then come in. Anyways, thank you for having us here. And Sustainable Development Goals, as interesting and as exciting as it sounds, it's a very broad perspective that we want to achieve till 2030, that the United Nations and other nations have come together and put out. Sanjay, I'm going to start with you because you, in your experience, have worked with, of course, Aadhar and your various interactions with startups, with Bharat Innovation Funds. That's something perhaps just happens on the sidelines, right? When startups come out and want to build a product, and especially when it comes to financial technology, the primary focus has been financial inclusion. That is what people have been aiming to do and have successfully done that in the last at least 5-7 years in India. But when it comes to accelerating these SDGs, you think there is an innovative way to do it, or it's just luck by chance?
So broadly, if you think in terms of the SDGs are kind of a pact between governments to say we are at this particular point in time not meeting our aspirations, and these are the goals that we should work towards. So as a global community, we get there. And so that should help in creating the policy space to do things. And financial inclusion happens to be sort of an underlying assumption among many of the SDGs. Mm-hmm. And so what happens is then the government policy starts to do that and creates the favorable environment for a startup to come in and do things. So because financial inclusion has been a priority, that means you get certain tax incentives or certain operational incentives, like priority sector lending becomes a target which RBI then gives a bank. Mm-hmm. But as a startup, you focus on your product, your user, and the kind of tailwinds you get, because you can now take advantage of these changes in policy space that to allow you to go after that particular customer and make it viable.
Correct.
And so you really, as a startup, if you're worried about which SDG you are focused on, you're really doing the wrong thing. Mm-hmm. But as a policymaker, trying to create that space for startups to go ahead and accomplish certain goals is the right thing to do. Yeah. So I would say from a startup perspective, you always go bottom up and look at the landscape and where it is advantageous for you to operate. And the job of the SDGs and policies to create that landscape.
But Siddharth, from a big brand, like PayPal has been around for many, many years, of course. Have you thought of addressing these SDGs specifically? Of course, your biggest play in the game is, yes, we want to get more and more customers using the particular platform. Yes, you want to fund more people. I've seen various efforts that PayPal has started since 2013, and you introduced a couple of platforms in 2017 as well. So how do you approach a bigger project or a bigger goal of perhaps ticking most of those 17 SDGs, if not all?
See, for us at PayPal, if you look at any presentation that Dan himself gives, he calls something as PayPal is on the path to democratize payments worldwide. Now, if I look at India specifically, and I've been a payments guy for 4 or 5 years now. Prior to that, I was in telecom. But my personal take on payments in India is that we've not yet scratched the surface. Also, forget about exploring the market to its true potential. Now, there are we are so fortunate to have a star salesman for online payments in India. The gentleman's name is nothing less than Narendra Modi himself, who's been kind of a revolution when it comes to online payments. And remember the chat we were having outside. When I saw this notice, a couple of months back that every car needs to have a fast tag, I was like, dude, this is Demon version 2. Nothing short of that. So today, if you think about the scale that the Indian government is kind of helping companies to come up to, having a tag in every car itself is no mean task. So for us at PayPal also, we kind of take these initiatives and are very thankful to the government of India for supporting these initiatives, because these initiatives are the real game changers. Now you could call it in some MBA terminologies as SDGs, but end of the day, this is nothing short of a game changer and a historical moment in India. So for us, even if you saw recently, Dan was with the finance minister in a one-on-one meeting. So we are working very, very aggressively in investing into the Indian startup ecosystem. We are investing a lot into our tech centers in India. Our tech centers earlier in Chennai and Bangalore were practically nothing but body shopping centers. But today, a lot of analytics happens there. Today, a lot of high-tech innovation happens in those centers. So these are some of the steps that as a large company like PayPal, we are trying to take and, be hand in hand with the government of India. And extremely fortunate to have a dynamic, startup ecosystem. In fact, I was with one of my friends from Bank of Baroda. Fantastic startup ecosystem that those guys have built. So things are changing and good to be in a place like India particularly right now. I think if you're not in India, you're not doing justice is what I can say.
But so far we've seen that now when you look at financial technology or financial inclusion per se, earlier I remember 5 or 7 years back there used to be a bit of a crisis of whether there's enough finance available that will flow through the tech route to various participants. Nowadays it's not that. It is more about how efficiently does the money get out and how efficiently is it used. So I want to get Jeff's view on this. Jeff, when you look at numbers, and you were speaking about the presentation that you made earlier, when you break it down to the efficiency of fintech reaching out and addressing the particular problem of financial inclusion or what democratization of payments per se, how do you break it down and what do the numbers say to you?
The way that we look at this is payments are great, but you have to know if you're going to get paid, right? That government can be helpful, but in my opinion, everything that government touches, not globally, turns to mush. So fintechs are going to lead this. And our perspective on this is that the future of inclusion is the consumer as their own data. Trying to find additional ways to decision those consumers using the same metrics, same big data algorithms that everyone's been using for the last 60 years just doesn't work. And calling alternative data the same data, just taking it from a different location, is not really alternative. So really the future, and kind of the way we're looking at it, approaching this, is ultimately the consumer is the teller of their own story. The consumer is the owner of their own data. The consumer is, in fact, the data. And when you look at it from that perspective, suddenly everyone's decisionable. And then you have to decide, okay, how do we access that information? How do we access those individual consumers? And they're doing it. They're doing it every single day through social media or any media used socially. And every human being on the planet, from the top of the council to the walking through the field, is accessing media used socially. So we look at this and say, we can decision every human being on the planet with that perspective.
But how do you actually see it turning out when it's used innovatively. Paarul, that is something perhaps that you also keep in mind when you go out and invest in a company. Everyone wants to solve a problem and everyone wants to be part of that financial inclusion pie. But the fact is, are you doing it innovatively? Are you doing it differently from other people in other countries?
I mean, there's a couple of different, I guess, segments into what you're talking about. So I lead the seed stage investments for Accion Venture Lab, which is really one of the only investment funds out there that are investing in companies that are driving financial inclusion. And the way we sort of describe that is essentially by saying, you know, how are you improving accessibility? How are you improving affordability? And how are you improving the sort of the quality of services that are being given to people? And how is technology being used to sort of drive those goals? In some ways, I mean, coming back to the main question, which is that can financial technologies be used to really accelerate SDGs, makes sense to me. In another ways, I feel like this is a bit of a it's a linear question or not a nuanced question, because technology can play multiple roles, right?
Correct.
So, I mean, to Sanjay's point earlier, we do need to talk about what else can technology do and how do we sort of have responsible technology drive sustainable goals.
Do you want to add to that? And then maybe I'll get Heyman.
So what you're talking about was actually to say that, you know, if you want to make changes, startups are actually sort of a bottom-up way to do it. And if you want to think top-down, you know, you can ask the question, how do we get, not necessarily in financial inclusion, but in terms of, say, clean tech? The question has been asked, can we take billions of trillions of dollars from capital market flows and make sure that you can get clean energy, right? And if there's that much of money flowing into clean energy, there'll be, you know, a whole bunch of activities that will come to life that will make it happen. So while I think we've seen issues at, operationally on some of those, but broadly that is a concept. So similarly, if you were to sort of say that, you know, and we tried this with priority sector lending, right? How do we take, again, lots of money and make it flow into sectors that will enable financial inclusion? And maybe there's that kind of thinking that needs to happen. So you need both a top-down and a bottom-up approach, and where you sort of try and set these ways to make sure that a lot of money can get diverted towards meeting these goals. And so I think from that perspective, you know, I think you need both ends to work correctly for that.
How has the experience in Nepal been here? In India, we've got this big example of Aadhar. We've created a unique ID. It has been used largely whether it comes to, you know, providing insurance, ensuring people are getting their rations in time. What are your learnings in Nepal when it comes to financial inclusions? What is the country doing, and individually, what is the private sector doing?
So Nepal is basically developing very rapidly, I would say, in terms of fintech sector. The way of doing it changing on a day-to-day basis, because the financial sector is driving the economy very fast. And if you look at the service offering, service delivery by the service provider is changing the way of doing business. We have been providing this platform which is using by the rural communities of Nepal, so especially targeting for the unbanked and underbanked population. So they can use this technology, they can use this platform to use the service from different perspectives, especially from the SDG perspective. They do have the better access in the health insurance, they do have the better access in the education sector, they do have the better access in terms of the lending and many more. So overall, if you look at the development perspective, so we have tossed mainly into health sector, education sector, and the social business sector, so where we are providing the platform, all the small level entrepreneurs are basically using this platform to lift up their business. So from that perspective, what we can say is that Nepal is moving into that direction, even though it's not a big economy, but looking at the current scenario of the economy,
But
almost
I
like
want to
2%
understand what is the consumer perspective. In India, some people took to financial inclusion or to the technology part only because we were faced with something like demonetization. Had demonetization not happened, maybe it wouldn't have been such a big game changer in India. So, and more people are now open to thinking about making payments through mobile, getting online and getting all these things done, and perhaps asking for loans and all of that and getting microfinance also through technology. But are people as open, because you haven't had a big event like demonetization, luckily for you?
So I would say the awareness is still going on because the technology required a lot of adaptation kind of things.
Correct.
And looking at the Nepal terrain, we have a lot of like rural area and village, so people do not have the access of internet to penetrate into that level. So the way of thinking is changing, but it is taking very slow pace, I would say. And not like India, we don't have demonetization and there is no compulsion of using the technology for for any kind of service to be delivered. But looking at the current market scenario, the growth is tremendously seen and the service level is delivered in different perspective. So people are having attraction of getting this kind of service in the days to come, I would say.
You want to add something, sure, Sanjay?
I don't necessarily think Demon was such a big accelerator of digital payments. If you take a look at the month-by-month charts of payment instruments, etc., you will actually see that what happened during Demon was the check usage went up. Right? I mean, check and EFT went up. It dropped again 3 months later. And if you see the rest of digital payments, whether it was cards or UPI or even IMPS, I think those started to pick up about 6 to 7 months after Demon. And by that time, cash is already back in the system. So there may have been a mindset change which made them more open to consider it, but I don't think the data shows that that's what happened. On the other hand, I do think that the fact that we were, and we still are, by the way, a laggard in digital payments, right? I mean, when we looked at the committee, we looked at the international scenario. India was doing about 5 years back 2 digital payments per person per year, right? I mean, that's and now we are doing about 10x that number, right? Now the thing is, 10x is a great growth, but the base was so small. If you take a look at comparatives, Indonesia, Malaysia, etc., are around about 70 to 100 transactions per person per year, right? And we were at 2. Russia was better than us.
Yes.
Among the leaders, the Nordics are at 500, 600. Singapore is at 750. So we were so far behind, and I think it was a pent-up demand which sort of just came in a way that allowed us. And I think it got supported by a lot of the tech community, the startups, the banks, everybody put their weight behind it, which I think helped. But I do think that we don't recognize how far behind we were. And that even today, I think we have a long ways to go before we get to where we would want to be. That I think, it's important we take it from a global perspective and say, okay, today we are at 20, we need to be at 200. How do we get? And that, I think, is, or you say, we're going to get to 200, let's imagine that world and build startups that are going to operate when we get to 200 transactions per person per year. And I think that's what we should be seeing today in the industry and sort of building towards that. And so that...
So how the question then thereby lies that how do we get there? How do we get there to accelerate those numbers? And Sanjay spoke of the Indonesia example, and I've seen the work that Grab has done, or companies like Gojek are doing at this point in time. They're making payments more and more accessible through their own network.
But the problem is bigger than that. That's a problem that comes after you've dealt with the core problem. Having a cool way for someone to make a payment is cool. But the problem isn't here at how to make a payment and then call that a successful financial inclusion engagement. It starts way back here. It starts even before being banked or unbanked. Having $100 on a checking account doesn't get you access. It gets you a checking account.
True.
Access comes from the financial products, goods, and services providers understanding the engagement risk, period. If they can identify the risk in the relationship with you, suddenly a broad spectrum of financial products and services opens up to you.
But Jeff, that's been the problem, right? That people do not want to go and lend to people from socially poor economic backgrounds simply because they don't have a credit score.
Well, exactly.
So how do you address that problem of having a credit score?
That's what I'm talking about, is the consumer as their own data. Kind of what, I'm not here to pitch my company,
Yes.
but this is what we're talking about, is the consumer is telling that story they're telling it through not just social media that we use, but also media used socially, which is what we use. They're telling that story, and that story is coming from who they are as a unique individual human being. And they are telling that story. Again, this is not a pitch for my company. But that's where the problem lies. The problem lies in understanding that risk. And if you are solving that, then everything else suddenly becomes more interesting. Getting someone banked becomes meaningful. Or finding a really cool way, an efficient way for them to make the payment that they now have earned through this first step, this baby step here, now becomes more important. Banking, unbanking, we don't even talk about that because that's not the problem. The problem is the engagement risk, and that consumer is telling that story every single day in every utterance they make through any media use. So they're telling that story. Kind of like the way we say, again, I'm not trying to pitch coming from my perspective.
Sure.
And the way we approach this, the solution is every word the consumer says tells the story of who they are. And that story of who they are as a unique individual human being, these personality conditions and domains, in binary ways tells you if they're going to pay you or not. And that's the key. And this is what I say, and this is not entrepreneurial hyperbole when I say we can decision 5 billion people right now. Because they're telling
But
that
I
story.
think in India there are people who are going out there and trying to find those people who have been unbanked. Maybe it's conscious, maybe they think this is a market which has been left largely untapped by your structured and scheduled banks, and we need to address it. But then how are you encouraging them when you talk to them as an investor, as a mentor at this point in time?
So the way I think about it is, while in the rest of the world, credit cards have been the primary way people pay, in India it's not been credit, right? I think if you take a look at the numbers in India, we only had, till a few years back, only 25 million credit cards in the country, not people with credit,
Yes.
but number of cards. Today
Yes.
that number of cards is 40 million. And there's a 1.6 ratio between average number of cards that somebody has. So that's only about 20 to 25 million people in the country have a credit card. Yet we have about 650 million bank accounts that are linked to the Aadhar. That means at least 650 million people have a bank account. And just to sort of take a sidestep, 10 years back, only 1 in 6 adults in India had a bank account. Today, we are at 80% penetration, at least at an individual level, and at a family level, we are 100%. Every family has a bank account. So we've this is step one. Second is usage. I think you seem to see that go up with digital payments. So most people today are paying not with credit, but with debit. So UPI is debit, IMPS is debit, debit cards, of course, are debit. And all of these have more penetration today than credit cards. Even among the card payments, I think debit cards exceed credit cards by a factor of, 1.6. So from that perspective, we are not necessarily a credit-led payments model, but a debit-led
I
model.
think it's also the way we've been brought up and the way that we've learnt about money. We don't think about, and I'm sure it's changing now aggressively with the millennials and more younger people joining the workforce. Like you say it in Hindi, कि कर्ज लेके खर्च नहीं करना है. We've been told that by our parents and
Exactly.
grandmothers, everyone.
Right, no,
So,
even
but
I use a
do
card.
we need to change that? Do we really need to change that? We need to ensure that someone who wants to start a small shop or a factory somewhere gets the loan that he needs at this point in
Correct.
time. Banks
So-
have not been doing that.
Right, so you think of loans as a way, particularly in business, as a way to increase your business. I can do a certain size of business if I have X capital. If I'm able to enhance my capital by taking a loan, I can get a leverage and do more. And I think from that perspective, we've kind of accepted credit for business lending quite easily. We are starting to see credit for consumer spending as well kick in more. I mean, it's more than before. But I was just thinking in terms of payments, a lot of people still use, I don't have the stats on this, they pay their credit card bills in full every month.
Yes.
That's still a large number.
Yeah, me being one of them.
Yeah, so it's a payment instrument. It's not a credit instrument, right? And so that's not necessarily the right measure for credit.
True.
So a lot of it is about payments, and I think payments will go one way. But in terms of lending, I think it's we've seen both aspects. Is where you are able to get consumer goods on credit, and the other side is where, of course, you want to enhance business growth by credit. And those two parts so far were slower. And I think what you're seeing now is because of the income you can make on if I have a startup building a savings product, they make 0.5%. If I'm on a credit product, I make 2.5%. And so, the way the incentives are structured is that there'll be a lot more startups who will go towards that 2.5% and will be more focused on credit. And that I'm not convinced that's the right way to go, but that's being moralistic, right? As an investor, that's not what you're supposed to be doing. But but I do think that is being pushed today, and you're seeing a lot more companies out there building credit products, getting into the consumer. A lot of them will end up serving people, grow their business, because in some category of consumer, particularly financial inclusion, the line between what is personal credit versus business credit is very small. I may take credit to buy a scooter, but I'll actually be growing my business because I don't take money out of my business anymore. So to that extent, that line, or it could be a motorcycle for a delivery boy, is it personal or business? You can't draw that line. So I think we are going to see that credit go in, and it's a good thing because it will fuel the economy, demand, it will allow people to grow. And I think we will see that happen. And we are at that start of that journey. And I think the journey we've been in the last 10 years has been uniquely Indian. And we started with bank account access, now payments, and now we see credit built on top of it. And I'm actually very bullish on all of these fronts.
No, I mean, I think that's a pretty valid point you're making, Sanjay. I mean, so one of the companies we invested in is a company called SmartCoin. And, to Jeff's point as well, it's essentially smartphones in India are pretty cheap. Data in India is very cheap. And what this company does is, if you have a smartphone, they're able to sort of geolocate and be able to tell that you have a job that you're going to every day, in and out. They're able to say what kind of number of contacts you have, and therefore, are you someone in society that has a good standing? And so you don't necessarily need a bank account or a payslip, but you become credit worthy to them, and they're able to give you a digital loan. Right. I'm just saying that but this is like people who've never before were able to even apply for loans. And these are people who work maybe in the informal economy and have been able to now access credit, perhaps for consumption, which is not always the case, but sometimes for business as well. Yes.
That's a very transactional way to look at it. We're looking at it differently. But to, I think, your point, how do you get it? How do you use for example, a technology like ours? How do you get that to the? Clearly, it's through the banks and the lenders. So I'm gonna give you some. We're in 11 countries right now. We have pitched hundreds of banks and lenders. I know what they say. I know what the pushback is. I know what. I'll give you an example from a meeting we had. I won't tell you who it is. But a meeting, a small business lender we had here in Mumbai. Very, very active. Met with the CEO. He's like, I love this. It's a good thing my chief risk officer isn't here because he would hate this. I said, not that I haven't heard this, but I said, so why? He says, well, he would say, well, I've been doing this for 25 years and we've never done it that way. And I said, that's the problem. You think you're going to leapfrog and gain 800 million new customers by doing what you did 25 years? Heck, doing it 5 years ago doesn't work. But this is the mentality of a huge swath that is providing that blocking of new technologies coming in, and we see it all the time. And our niche is finding those that say, absolutely, we know this doesn't work. We've tried it, it's not growing us. We know this doesn't work. We know that there's billions of consumers out there that we can actually talk to, show us the way, and then they adopt. But it's a huge swath out there that, it's a good thing he's not here. No, it's a good thing for you he's not here.
Yeah.
Because he would block these kinds of tech. And that's part of the problem, is getting either leadership that says you're not serving the inclusion equation here, and the inclusion equation is all about growth, or simply not listening to them. And discovering that their competitor is doing it and killing them, say, you were wrong, we have to do these kinds of things.
So how do you make a more encompassing product and also ensure that the consumer behavior changes along with that? So that's also important. That I think is a challenge that most smaller fintech companies are faced with at this point in time. That you think you might have a thought that might change the world, but are your customers going to change, and are they willing to accept that change and be part of that revolution?
So I think that's a great question, and especially when it comes to financial technologies. And I work with a lot of startups. In fact, my earlier assignment was with a company called Razorpay, and let me take it on a personal level. The only reason I joined Razorpay as an employee number one of that company was that when Harshil and Shashank, the co-founders of Razorpay, showed me, and I remember the meeting was in a mall in Mumbai, and they showed me the product that, okay, this is how online payment can be made. I was like, what? Now, India had never seen something like that. And I was like, Harshil, I'm coming on board. And trust me, if you can actually get that wow factor in the fintech environment, that is what can change things. Unfortunately, what is happening in India, and especially the city where I come from, which is Bangalore, it's nothing but a cut, copy, paste model of the Bay Area. Okay, I'm not being either racist or being critical against anyone. So don't quote me on social media that Siddharth was saying this. But I'm just being very, very honest that people visit Bay Area, look at an idea, come to India, try and replicate that idea, and then think that that idea can change lives of millions of people in India. Doesn't happen like this. So please, my request to all startups is do an idea vetting at your home first. Either with your family, with your partners, with your friends. Try and see that, okay, is this actually a wow factor? Just don't get convinced that, okay, PayPal in US had done it 10 years, and my friend, this gentleman here has been working with PayPal for 12 years. So just because that product was a success in US could be a success in India also? Guys, the answer is no.
Because the markets are different, right?
The markets are different. The way people react in India, the way people transact in India are different. And I'm just going back to Sanjay's point. I think I will also contradict you on this point that Demon was not the game-changing moment. It was one of the game-changing moments. I think Aadhar, coupled with Demon, and the whole financial inclusion pushed by our Prime Minister himself, GST. These are 2, 3, 4 different milestones to the way people today transact in India. So that's and no political statements. I'm sitting in the wrong city.
No, things are calmer now than they were 4 days back. Hemraj, I want to get your point also in this. Of course, we've spoken about how India is shaping up, and there were examples. You missed out on that conversation. We were looking for you. How Indonesia has been more progressive when it comes to financial inclusion and got more people who are not banked to perhaps bank, if not with bigger banks, but with smaller companies, that they can associate with, that they can, complete their payments with, etc. How is it for Nepal? Is it a big task? It's a big ask to have, or you're somewhere getting there, will reach there in the next 10 years?
Yeah, I think the legislation is changing from that perspective as well, because for this business, the important part of the regulator is there. Until and unless the regulator doesn't give the proper legislation for this kind of fintech company, they can't connect to the banking system as well. So now the regulator have also realized the importance of changing the legislation. The direction is going into that one. I think if you look at the last 10 years, nothing was happening over there, even from the global perspective. But within this, I would say.
So is the push coming from the regulator, or is it coming from players like you who want those changes to come?
So we are pushing to the regulators to change it, and regulators also realize the importance and the demand of the market, because the consumer level are also accepting slowly this kind of service. So regulators are forced to change the legislation. Like if you talk about the financial transaction, they have set up some sort of limit, like say let's say 25,000. Now they are forced to increase the limit because, still the majority of the transaction is going by the cash, but going forward in terms of handling and other issues of the cash, people are moving toward that direction. So I'm hopeful that going forward in another 5 years' time, the payment dynamics will be changed from the fintech industry.
Okay, because Bhimraj spoke about regulation, I think we'll be overshooting our time, but my final point then comes to regulations, and of course then should the regulator also be looking at what countries have come together and signed in those SDGs, because at the end of the day, it's at the back of the mind of every government to achieve basic things, elevating poverty, ensuring everyone is well fed, ensuring there's education, ensuring there's inclusiveness. So is it something that regulators need to think of and actively work towards and help fintech companies?
I think more than regulators is the government which sets the policy direction.
Correct.
And the regulator's job is consumer protection, making the industry grow in a well-formed manner, etc. So I think it's really more Delhi that I would look to for setting the right direction and policy around inclusion. And the regulator to follow through by making sure that those goals can be met. I mean, they don't put hurdles in the way of people who are working towards those goals for various reasons. I mean, there has to be ways to do both customer protection and more experimentation. And that is always lost in regulation, because what happens is, in terms of customer protection, you want to reduce experimentation.
Right.
And that's really where I think I would like to see the regulators give that room. And they have fortunately just announced this regulatory sandbox to try and address those specific issues. But broadly, that's what I would like to see the regulators sort of allow that experimentation to happen so that those goals can be met. But before I go, I actually want to put a pitch. I mean, from the inclusion perspective, we have in our country, we have about 900 million phones in the country, 450 to 500 million are smartphones, the rest are feature phones. In terms of digital payments penetration, about 100 million people use UPI. So, in the smartphone category, only reach 20% of the population. But in the feature phone category, digital payments are probably around 10 to 20,000 people. And so, from that perspective, we're really trying to see how we can bring those folks into this. And as part of CII, what we have done is we have put together a grand challenge. So, we're working with NPCI and the Gates Foundation. We put $100,000 as prize money, split as 50, 30, 20, the top three. And it's a global challenge. We want everybody from around the world to come in and compete and try to get people to transact digitally on feature phones. And while people say that feature phones are going to go away, the fact is they haven't. And the rate at which they're going down is still too slow. And from a policy perspective, you can't leave them behind. So we sort of said we want to how we can improve payments through those. And so we've set up, a small pot of money. But more importantly, if they work with NPCI and they're actually successful in what they do, then they probably get country scale adoption. And I think for a startup, that's a bigger price than that, $100,000. So we've actually just announced this challenge last week. And we are hoping that we'll have a lot more people come in. So I thought I would take this opportunity to pitch that, even though we're not.
So please do participate. Can we take questions or?
Yeah, I think we can do one.
Okay, one question. Any questions? Yeah. Thank you. Let the mic come to you.
Jeff, I heard your pitch earlier, and I'm glad you're working on such a
And you loved it, right?
I was absolutely blown away, but I was confused as well. And I'll
It's
tell
only
you,
5 minutes.
yes,
Yeah.
I'll tell you why. What we have learned from business in Nepal or in India, almost the same in this region. The basic element of doing any business is building trust with the customer or the consumer. And when it comes to your platform, and since although I'm not the Gen generation or the millennial generation, I'm a bit older than that.
So am I.
I don't see how do social media per se establish that element of trust, because I've seen my colleagues, my friends posting stuff on social media that they would not actually do in their real life.
Maybe, right? I know
How
where
do
you're
we
going.
relate to that?
No, I know where you're going. We're in 11 countries right now, and we've got a global 87% opt-in rate. The lowest we have is with the bank in the Nordics at 76%. The highest we've got is with a lender in Hong Kong at 99%. Everybody else is in the middle, high 80s, low 90s, mid 90s. As long as the consumer understands, and I wish we had more time to answer this because there's a lot of cool information here, understands the value exchange, they're willing to share that. As long as it is clear. And one of the things to this point, which is the social science aspect to our solution, not the algorithmic science, is that we're able to deliver an average of 44% more completed applications to our customers. Now, we couldn't have projected that. But what's happening is, when I was talking about small data earlier, is the consumer has figured out that they're small data, that they're the data. And that instills confidence in them. Because everybody on the planet knows that they're being decisioned by big data algorithms, that they're nothing but an aggregation or affinity. They're looking for a cluster and they're picking a cluster and saying, okay, you're good or you're bad, which doesn't really work. That's not about inclusion. So consumers, people have figured out that by either on the click-based, that by clicking here, I'm my own data. They figured it out. No one told them this. And we're seeing a close to 50%, average of 44% more completed applications. It's that confidence that they have in making that click. And as long as that value exchange, do this and something good is likely to happen, this is your shot. This in a rejection scenario. Rejection scenario, it's almost 100% opt-in. Hey, sorry we had to reject you for this, but tell us a little bit more about you. 3 and 5 become yeses. It's almost 100%. They click that. That's a built-in value exchange. This is the way you get to yes by being who you are.
Trying to figure out back in my brain, how is a non-smartphone user and somebody like your product, how do we marry it? I don't know where the future will take us, but that will be an interesting take to learn and grow further. Thank you so much.
Thank you.
Thank you. We do want to hand out some quick gifts for the speakers here. If you can hand these out to the speakers, yeah, that'd be great. Thank you.
Thank you so much. My pleasure. Thank
Yeah.
you.
Yeah, yeah. Is that for everyone? No, she will also get. She will also get. No. Yeah, yeah. Samir, if you can also give one to Harsha.